Okay, welcome everyone to the Sunday review. And if this is your first Sunday review, welcome to the first of many. I'm going to try to do these more often. I know that this is something I used to do, every Sunday, and it wasn't always live. But I'm going to try to do this a lot more often now because I know that there's been a lot of requests for it. So, and I want to give the people what they want. So every Sunday, I'll have a link for you guys. May not always be live, but I'll have at least something out for you to review and to look at, and hopefully it'll help you out with the trading week. All right, so let's take a look at what we have in store for this week. And this week is special in the fact that we're closing the month of November and we are starting the month of December. Now, this time of year is normally going to be very, I guess, not great trading conditions, right? So it's the end of the year. We're getting into the holidays, right? We just had Thanksgiving. And we're going into Christmas and New Year's, and typically at the end of the year around this time, price and movement on the charts is not the greatest, right? It could be lots of consolidation, lots of kind of side to side stuff, and a lot of times it might not be really conducive to what you're looking for in terms of like a good trading setup or something like that, right? So this week, we're going to be closing out the month of November. When we go look at our charts, I'm going to be starting, I'm going to try to do a complete, kind of like top-down analysis for you guys. I'm going to start with the monthly because why that's significant is because obviously we're closing the month, right? So you're going to see how the monthly candles are going to be closing and how we're going to be starting the month of December, for the pairs that we're looking at. So we'll take a look at like the bird's eye view of that, and then we'll go into the lower time frames, and then we'll kind of make our predictions. Okay, so this week, as you can see on the calendar, we've got a lot of red folders. I mean, these are our normal red folders, not something huge. Like it's not like NFP, it's not FOMC, it's not any of those kinds of big red folder events. But we have these kind of like normal red folders that we have every week. So we've got like CB consumer confidence, we've got preliminary CPI, we have unemployment claims, right? ISM manufacturing PMI, stuff like that. I would say probably the one that is going to have or carry the most volatility is going to be this right here, the Fed Chair Powell speech, because it always does. And the other ones are probably just going to be, well, I mean, we can see, we'll play it by ear, but we'll see how they play out this week. So this is probably the one I would be most concerned with. And this is the end of the week. It's Friday. Okay, it's going to be later in the U.S. Session, so might not be something that is too significant, but this is probably the one that I would think is going to carry the most weight this week. Okay, so Monday we've got no red news, so the start of the week is going to be probably pretty tame. We're coming off of Thanksgiving, volatility and the holidays, so it might not start off, hot and heavy, right? So we might not get a whole lot of activity at the beginning of the week, but then as we move through the week, as you can see, there's lots more red folders and probably a lot more price movement into there. All right, so as we go, let's go over to our chart, and let's just make sure that you guys can see this. So let me share my let's see here. There we go. So it should be loading up now, and you should see my DXY chart. Okay, so now, like I said, we're going to looking at the monthly chart, okay, and starting off with our top down, we're going to go with the highest time frame, right? So our monthly chart, and then we're going to work our way down. Okay, so as you can see, this is our November candle. Okay, so as you can see, we're going to be closing the month with a big bearish candle, and if you guys are familiar with a 3-bar swing, right? We call a 3-bar swing as in 3 candles, right? Where we have a high in the middle, and then we have 2 lower highs on the left and the right, right? When we have this, we have a swing high, and we have basically the makings of a bearish movement, right? Or a bearish trend that's going to start. So if the month of November is closing as a big bearish candle, you're likely going to expect December to start and to end, right, bearish, right? So we're going to look for possibly like a retracement. Okay, so we might end, November here. We might retrace at the start of the month, right? But then December, we're going to expect to close below this level here, right? So we'll be looking for below 103, okay, and then going on into this low in here. Now, I don't know if we're going to close below the low, right? But let's put up my monthly markings up here so you guys can see what I'm looking at here. But we could potentially see price come down into this level here. And I'm just looking at a range of this high and this low, right? Because we do have a retracement that's happening and we do have a swing high, right? We just established that we have a 3-bar swing and that we have a swing high in place. So price is retracing back into this kind of small range that we made here, into this discount area, right? So the discount area is below the 50%. Right. And this is the area that we would expect price to retrace into, regardless if it was coming down further, right? We would still expect price to come down at least into, this area here, to retrace back into this candle here. Now, why this candle is significant is because obviously we've taken liquidity below the lows here. Okay, we've also traded into a nice little imbalance here, right? And we saw a reaction from that, which caused this little surge and this little range. Okay, so obviously there's going to be an expectation of price reacting to something in this level. So we're going to be making our way down here. So long story short, what we're expecting for the start and the close of next month is that we're going to be having another bearish candle, right? So the monthly in this case here is going to be bearish, the bearish bias in the monthly. Let's drop down to a weekly and just confirm that we're looking at the same thing here. All right, and let me drop my weekly on here. All right, so now with the weekly, okay, we can see that we have a 3-bar swing and a confirmation. So how do you confirm a 3-bar swing is when you look at the third candle that's made the swing high or the swing low in the case of a 3-bar swing back up. You want the third candle to be broken to the downside. So the low of that third candle, whether it's by a wick or a candle body close, right? You want that level broken. That'll confirm the direction for you, or that makes it a lot more likely that price is going to continue in that bearish direction because you've got that confirmation. Sometimes what we get is we have the 3-bar swing, but we don't get the confirmation, and then price continues to go, bullish, right? So to get the confirmation and to get that close of the third candle's low, that gives us the bearish confirmation that's going to continue. And you can see that it does that, right? As soon as we get that close below that third candle's low right here, we get a retracement that does not break the high, right? So we get a lower high, and then we get this continuation, this big bearish move to the downside and the continuation, right? So we can see that the weekly is obviously bearish, right? We're still moving in a bearish direction. The weekly close was also bearish, right? We still got, if we look at the range, okay, that same monthly range that we just drew from the top to the bottom here, and the same idea as we're still looking for price to retrace down, into this discount area, right? So if we look at, where it's at right now, it's kind of just at the 50%. So there's certainly more room to the downside, and it hasn't shown us really any kind of, bullish signs of returning around right yet. So, the weekly is also bearish, and we'll be looking for it to, even if it was going to come down and trade, much lower, we would still expect it to trade, down to here, right? So monthly bearish, weekly bearish. Let's drop down to the daily. Okay, and we're just going to keep confirming that we're looking at higher time frame bias, right? So our daily chart, okay, now we can start to see more structure, a little bit more, levels to like what's happening here, right, on the lower time frames. So we had a last break of structure over here. Now, generally what I do is I try to find the last kind of range high and range low, and where we've recently, the most recent break of structure, right? So on the daily chart, we can see that the most recent break was above this high here, right, which created this swing high over here. And then also, from that, we get the 3-bar swing, the confirmation, right? Just like we saw on the weekly here, and then the continuation, right? So now the area that we've traded into here, okay, was potentially going to be a area where price would make a higher low and continue in this kind of daily bullish uptrend because we were in a uptrend, right? We broke the high and we were retracing. So, this level here, because we got a 3-bar swing here, right? I was looking for the confirmation of the 3-bar swing, and here's an example of where it doesn't give us the confirmation and it doesn't continue, right? So we've got 1, 2, 3, right? The swing low is in the center. We've got a higher low to the left, a higher low to the right, and then we have the third candle's high here, right? Which would need to be traded through if price were to continue or making it likely to continue. So as you can see, the fourth candle here does not do that. Okay, now just as an aside, it doesn't always have to be the very next candle. Sometimes it could be the fifth or the sixth, but it's just that you want to see this high broken to see the continuation. So obviously we didn't get that here, and the next candle actually went lower. So it's looking like this is going to be a continuation of the bearish downtrend, which is also what we see on the higher time frame, right? So on the monthly and the weekly is bearish. On the daily, we're still looking at this being bearish. And so, if we're looking at a like an obvious target, we'll be looking at this low right here. Okay, so we can start to narrow down where our objectives are for this week, where we're looking for price to go. So here we have a low at 102.93. Okay, so let's just say below the 103 big figure. Okay, that's going to be where we expect price to go this week. As just a target that we can reach for, right? An achievable target. So this low right here, right? And then we have a bearish bias on the daily with a 3-bar swing to the downside that is confirmed. Okay, so here you can see a swing high, a lower high to the left, a lower high to the right, and then the third candle has been breached on that Friday, right? At the end of the week. It's broken that low. Okay, so the likelihood of this continuing to the downside is greater than the reversal here happening to go back up, right? And so we're going to be expecting price to come and take out this low, because that is going to be the draw on the liquidity. We're going to be looking for it to come down here below this low and below this low down here, and our big figure target is 103, right? It's a nice round number that we can shoot for. Okay, so let's drop down to the 4-hour, and we're going to do the same thing. Okay, and we're going to run down the process again and look at the ranges. Okay, and just like before, what I like to do is, whoops, what I like to do is just take the most recent range and break of structure and work from there, right? Because obviously you don't want to just look at the, you don't want to, consider all this stuff back here because it's already happened way back in the past. Okay, so on the higher time frames, you generally just want to look what, what's happening right now, and then take it from that range to that point. So if you can see right here, the last break of structure over here resulted in this swing low, which gave us this pullback, okay, and give us this range. So if we look at the range high to low, okay, this is where we're at. So this is our current H4 range, and you can see that because we're in a bearish downtrend, right? We had the last break of structure was the low over here. Okay, this high, and then we made this pullback. Now the pullback, we expect price to retrace, right, into the premium area, which is above the 50%, into a point of interest, right, into some kind of area where we'd expect price to give us a reaction. And in this case here, we've got an imbalance here. We've got an order block here, which I've marked. Okay, didn't quite get up into there, but we saw, in reaction to those. So there's probably going to be something here on a lower time frame that price reacted to. When we drop down, we might be able to see it. But as of here, okay, we can see that it didn't quite get to the 4-hour, but it's okay. I mean, we're looking for price to retrace above the 50% level and then give us a reaction, right? Which it did do that. So we got a swing high here. We got a reaction, we got a lower high, and then a continuation, right? So very likely going to be looking for price to run this low. And then, as we said, below the 103 is going to be the weekly target this week here, coming down here. So I'm expecting price to come down to this level. Okay, and we'll mark this with a liquidity line, right? Because we're looking for it to run that low. Okay, so the higher time frames right now are showing us on the DXY that we're in line bearish, right? And we're continuing to look for bearish moves, right? So monthly, weekly, daily, 4-hour, all bearish. Right? Everyone's with me so far, hopefully. All right, now let's drop down to the 15-minute, and we'll look at this kind of like an intraday view. And let's drop this. And same thing, I'm just going to look for my most recent break and range. Okay, now our 4-hour range is, this high to this low. It's kind of a big range, right? So if I'm looking at this and I'm breaking down, 15-minute structure, where is the last place that price basically failed to continue and in this bullish range, right? On this bullish move here, we have a low, like this is the low, then it goes up to this high, higher low, higher high, higher low, higher high, right? And then at this point here, we get this break below this 15-minute low. So here's our change of character where price actually tells me that price is actually going to reverse, or basically telling me that it's not going to continue up from here. And when we breach that point, we can see that price makes a lower high, okay, and then it continues down. Now, I'm not going to go into all this price action here from last week because that was already happened, right? But you guys can see the areas I've marked where price reacted to, where it gave us the reactions that caused this move down, and where price is now, in fact, bearish, right? Because you can see now price is making lower lows, lower highs, right? And then continuing down the range. So our target over here, right, at the low of this H4 range, and then our bigger target, which is the 103, is down here. Those are still, what we're looking for price to do. So if we take a look at the last 15-minute range, which is this high, this low, okay, this is where we're currently expecting price to retrace to make a lower high, and then to continue down into those areas that we're looking for price to go down to. So what we can do is we can mark these areas inside of this range. Now, obviously, we're going to be looking, ideally, we'd like to see price come back above the 50% range, okay, and form a lower high, okay? So where does that leave us in terms of, likelihood? This right here is the last kind of lower high, right? So we'd like to see structure hold and continue. So this is where I'd like to see price react, right? I'm going to mark that 15-minute OB there. What's good about that is that there's also a very tiny imbalance right below that, okay? And so when you have a point of interest that is just an OB or just an imbalance, it's not as strong as if you have a combination of the two, right? And so this makes it a much better point of interest to watch for price to react. Now, of course, it could react to something lower down here as well, right? We did break this kind of lower structure here. So there's this little tiny range like this, right? And certainly price could do something like this where it comes up to this level and respects this high and then just continues down, right? And if that happens, then we will work with that range if it does. But if not, then we can expect price to come up to, something a little bit better, right? Whereas like even the 50% range is good, but like this is where I'd like to see price go. Okay, so if that happens, we get a reaction at that point of interest. We get price moving down, right? Then it creates again, lower highs, lower lows, and then we see price move through our target. Okay, and this is, what we'd like to see happen throughout the week, right? Not just Monday, but like, it might set this up on Monday, then maybe Tuesday is where we react to this level, and then it continues, right? So I'm just kind of giving you a broad brush view of what I'm looking for this week. This could happen on Monday. This could happen on Tuesday. It could, I could wait till Thursday to happen, but this is the idea, okay? So as long as everyone understands what I'm looking for here for the dollar. All right, so more of the story is what this week is the dollar is bearish, right? We'll be expecting bearish moves and the lows to be taken on the dollar, and 103 big figure is the weekly target. Okay. All right, so having said that, let's go into euro dollar. All right, so that sets the stage and that sets the precedence for what we expect for the dollar index, right? And so how does that affect all of our other pairs? Well, again, let's go down with our top down. So euro dollar on the monthly, okay, we can see that, it's been bearish, right? The trend has been bearish on euro for a long time. right? This is a monthly chart. So think about, in terms of these are years, right? Since like 2008, which is the high point at this rate, we saw price decline, and it's been on the decline ever since. Okay, we can assume that price maybe wants to come down here and take out this structure, okay, or trade into this this discount area, which is what we see here, right? So we've got a swing low, and price has made this kind of swing high over here. And so we're in this like little consolidation on the monthly. Okay, so once again, we have on the monthly, we have a 3-bar swing, okay, to the upside. We have a swing low in the middle, a lower high, higher low to the left and a higher low to the right. Okay, now this candle is bearish, right? So we're going to close the month of November, right, with a large bearish candle, which means that the implication is that next month, December, is also going to be bullish, and we're going to be looking for a continuation or a bullish candle to paint for the month of December. What's our target? And we're going to be looking for price to trade up to this high or above it. Okay, so we're inside of this range. Okay, on the monthly, we're above the 50%, which is good. So we're inside of, some sort of premium here, but this is where we'd expect price to go, right? And remember, this is a monthly candle. So even this little tiny little move here is significant, right? And so the month of December, we're going to be looking for, some sort of fill of this range here, right? And we're going to be looking for the confirmation of the 3-bar swing, meaning that we're going to be looking for price to breach the high of 109. What's the high of that candle? 109 652. So let's just call it 110, right? Big figure would be a good target for euro. All right. So if I put up the markings here, you can see as well, right? So our swing low is down here. We retrace back up the range. Okay. Remember that we were coming off of bearish structure. Okay. So this potentially could be the lower high, right? That then continues down to make the next lower low here, but we don't know that for sure just yet because it's still consolidating. But we do have, a 3-bar here, okay, that was confirmed, right? So we see that price made a 3-bar swing high, 1, 2, 3, and the third candle here has been broken to the downside. So while we do have a bullish 3-bar swing right here, okay, that could be also confirmed when we break the high here. You got to remember that the overall bias is bearish, and that we're still inside of this small range that I just had marked there. And if this is the lower high, it's going to respect that high here, okay, with that high being 112, 112.75. Okay, so there's room for price to come up here, right, and trade into this level without actually breaking it. But either way, we're on a bullish retracement here, so we're going to be expecting movement to the upside. It doesn't mean that we're going to be looking for it to trade through and continue up, although it could. But at the very least, we want the next candle to be bullish, right? So I'm just giving it a little bit of room here, right, for price to move into as a prediction, right? So if we go down to the weekly, okay, and I'm going to do the same thing here, right? So we go to the weekly chart and our markups, right? You'll notice that on the weekly, we have here's a swing high, okay, and then we have a break of the internal structure here, right? So we had a bullish move making higher highs and higher lows, but then we have a break of the last higher low here. So we have a change of character, right? Meaning that price is no longer actually breaking to the upside. We have a lower low, right? And so there's potentially a lower high being formed here, right? And so that's kind of fits into what I was saying about the monthly, right? Not exactly breaking that wick, but moving higher into this region to give us like a lower high, okay? But it's still moving bullish, and we did close the week bullish. So we're going to expect price to continue to move bullish. Why? Because we were inside of this range here, right? Moving towards the premium. Okay, so there is a small imbalance up here, right? We could be reaching for that. And I'll mark this as an imbalance. Okay, so you can see there's just a little bit of room between that and that, but that is a weekly candle, right? So again, there's room for movement there. That's not, it's not too small. It's 109 to, if I drew it up here, so it's about 100 pips, right? That's still decent range for a weekly candle. So that could be a point of interest that we look for. And obviously this is our, our swing low. We've taken these levels out here, so I can mark these as swept. Okay, and then we can look for a continuation up, right? Get rid of that because that obviously didn't hold. So if we look at our daily chart, and let's look at the daily to corroborate that. Okay, our daily markups here, we can see that we have a swing low, okay? And then the retracement from the swing low has been bullish, right? Higher highs, higher lows, this last kind of big push up, and then this last little consolidation that we have here, we have a 3-bar swing high. 1, 2, 3, right? Third candle's broken to the upside. So we're going to expecting price to continue up the range, and our range once again was this high to this low, right? Where are the points of interest we can look for? Again, there's our little imbalance up there, okay? So we can move this up here. Okay, so there's a daily perspective on that weekly point of interest, right? That's all the way up here at 111.50. Okay, so that could be a weekly target. The most recent high that we can kind of shoot for is the one right here above 110.65. So we can use that as the first target. Okay, with the intention of going up to the weekly imbalance up here. Right? So what's the moral? The moral is that we're looking for a bullish move, right? Or bullish continuation up to these levels here. And that could be the target for this week. That makes sense because we're looking for the bearish targets here on the dollar, right? And that's the inverse of what we would expect here on euro dollar, right? So we've got bullish bias, monthly, weekly, daily. Let's drop down to the 4. All right, and on the 4-hour, we can see the same thing here. So we're going to drop down and look for our ranges again. All right, so this is what I'm going to do with the 4-hour. Right, most recent range broken to the upside here, H4 high, huge move up, right? Swing high up here, that gave us a little retracement into this swing low here. And so you can see the structure is bullish, right? Higher highs, higher lows. This is potentially the next higher low that'll take out that high, and we're still moving in that direction. So you can see I've got a point of interest up here that I'm looking for price to reach up into. That is the high of this candle over here. And that was also the daily high that we just mentioned, which is 105, or sorry, 110.50. So this is where we're expecting price to go, right? So the first target we can look for is to run on this high up here at 109.65, and then this will be where we can expect price to go after that. So this is our 4-hour range. It's already retraced into the 4-hour discount, right? And then we've already retraced back up, and this is going to be where we expect price to go through the high there and then into this 110.50 area. Right, let's go to the 50. So now all I'm looking for here on the 15 is to basically confirm what I'm looking for on the 4-hour, right? The 4-hour meaning that we're going to be looking for price to run this high and then trade up into 110, 110.50 up here. So once again, I take my most recent break and my most recent range. The markups go up. All right, there we go. So this is our most recent break over here. There's the high after the break, right? And the pullback comes into the discount here. Just draw the range here. Oops, no, that's not what I want to do. There we go. Okay, so as you can see, after we trade into this high and we make this high and we pull back into this discount, if this was going to continue to be bullish, right, we want to see price actually stop making the lower lows and lower highs here and then start making higher highs and higher lows. That happens right here. So you can see the change of character happen on this internal swing. So we make a high, a low, lower high, lower low, lower high, lower low, and then this low goes on to make another high, right? So this, I mean, if you just look at the smaller time frame here, it starts here, but you can see it also breaks this high as well, right? So this is where actually where you can see price stops making lows and starts to make its way back up again, right? This is how you can tell when structure is reversing. And as you can see, after we do that, right, the next low it forms is higher than this one, right? So it stops making lower lows and makes a higher high and then a higher low and then continues in the uptrend. So this is where we left off last week, right? And price is continually making higher highs and higher lows. Even on the lower structures, you can see here it's doing that, right? Even when it does break below, like a short-term low, it comes back up and makes another high, right? So this would be like a point on the lower time frame where we'd expect price to reverse, but since it did not continue, right, making a lower high, lower low here, this is actually more so like a stop hunt or a liquidity grab. So this would be like a sweep of the London lows, okay, and this is like your stop hunt low rise. Okay, and then the break above. When that happens here, when we get that structure, the pullback between this high and this low, right? This is your like your continuation. So this is an example of a trade, a continuation trade on Friday that you could have taken in the New York session, right? With a retracement back into like the 15-minute discount here. Okay, so this level, or you can use where the small OB here, or the one right here at the low. But in any case, you're looking for price to come down into the discount area, right? And then looking for a continuation, meaning you're seeing price making higher highs and higher lows right here. Once this breaks the high, right? After breaking this low here, it doesn't continue. It doesn't make a lower high and a lower low. It continues it and breaks that high. So there's your kind of like your change of character and your entry setup, right? On the 15-minute on the New York session. When it comes back into the range here, this is where you can look for a buy setup. If you look for it on the 15-minute, right? That's completely fine. Like if this right here were your entry, let's just see if that was you know, taking, but let's just say we take on the OB there. If your stop loss is below that low, right, you're only looking at about an A pip stop. Even if I look at, let's just say I'm going to be ultra conservative and just say like anywhere below the 50%, I could take an entry, right? When price comes back in here, with this being my stop, because I'm not expecting price to take this low if it's bullish. So let's just make it an even, let's just say 10 pips, okay? To make it nice and even, like right there. Okay, so let's say my entry is there. Okay, not really, targeting anything specific, just for a 10 pip stop, right? And if I did that, okay, and expecting price to be bullish, right? If I'm going for a particular target, I'd be looking for price to take out this high, right? That's going to be in this case, about a 5.5 to 1. Okay, but if I'm conservative, which usually I am, I'm only looking for a 3 to 1 risk reward. Then my 3 to 1 was hit right here. Okay, and that first move up was basically an immediate take profit. Okay, so this is an example of what you can be looking to do, for a continuation when you see that obviously you have the higher time frame order flow is bullish, right? And on the 15-minute or on the intraday time frame, looking for, basically confirmations that can give you an entry setup or continuation setup when you have a higher time frame bias that supports it, right? So if the higher time frame is bullish and you see a stop hunt low, like a grab of liquidity that then goes on to break a high, give you a change of character or some kind of big imbalance or impulse to the upside, that is a clear indication that the order flow is continuing or basically in line with the higher time frame. And then you can look for your London session setup like this or your New York session setup, right? Those are the two times that we'd like to see price do this, right? So here's a really good example of that right here. And I know that entries are probably one of the things that gets people hung up on the most is where you enter. But if as long as you keep it simple, right, you don't have to go down to a really low time frame or make it like really ultra complicated. Okay, um, you just have to think of it in terms of try to keep it as simple as possible. Like don't overcomplicate it with lower time frames. If you can see, something that makes sense on the 15-minute, then just do that on the 15-minute. Okay. There's a question here for this entry you're explaining now for USD. I don't see any liquidity candle. All right. So there isn't a specific point of interest that I'm targeting. All I'm doing is I'm just following structure. Okay, so like I said, keeping it simple as possible, right? Because I know that the higher time frame is bullish, and I know that I'm looking for price to move higher, right? And so all I need is basically a confirmation that that's going to happen, right? So how do I know that that's going to happen? Well, if I look at structure on the 15-minute, right, and I can see that overall it's bullish, meaning that it's moving higher, right? The last break of the high here told me that price was going to start moving higher again because the low that we made, right, made a higher high. We never want to see a high breached when we're bearish, right? We don't want to see a lower high broken to the upside. It broke it to the upside, and then the follow through was that we made a higher low. Okay, so even if this was a fake out, meaning that we were grabbing liquidity above this high and we were going to go lower, right? Because that can happen as well. Then this would have made a lower low, meaning that this would have broken that low and continued lower. Then I would obviously assume that this would continue bearish. But because we didn't do that, right, and we saw price make a higher low, it continued to make higher highs and higher lows, even on the internal ranges here, right, and continue to the upside. And so this right here was your indication that price was going to give you a setup or a continuation. Is you see how price made the high, the higher low, right, the higher high, and then right here we made a lower low, right? So we actually broke the internal structure and potentially could have been bearish at this point, right? But instead of making the lower high, lower low, what we did was we broke that high, right? So making this essentially a stop hunt, right? Or a manipulation. And this happens in London Open, right? Which means that it's one of those times where you'd expect price to give you some sort of manipulation, either in the London session or the New York session. And so this is clearly our London manipulation, our stop hunt low rise, right? And then once we get the break of the internal high, we expect it to pull back. And on the pullback, we draw the range, high to low. We look for the discount, we look for the point of interest, and then we look for the entry. Okay, in this case, like I said, it's not a very clear, um, you know, like you said, liquidity candle or point of interest, meaning we don't really have a clean entry on the 15-minute. There might be a better one on a lower time frame or maybe even a higher time frame. But in the case of making it simple, right? All you want to do is draw the range, look for a discount, right? And then if you can pull the range where you can have an entry and a stop loss that is, in this case, it's only 10 pips, right? And on EURUSD, that's phenomenal. So if you can get a 10 pip stop on EURUSD and look for and aim for just like a 2-to-1, 3-to-1, like a simple, 2-to-1, 3-to-1 entry, a risk reward rather, take profit, then you don't even have to, aim for the high, right? Which some people do, because you're not sure if it'll go up there, but even just a 2-to-1 or a 3-to-1 is sufficient. That's still a great trade, right? So, right. If it's not going to be, if it's not going to be clear, right, then you can you can simplify it, right? You can say, all right, well, I know that price is going higher. So, the last low that it took over here, I wouldn't expect price to come back below this low if we were bullish. So when I draw the range, I know my stop needs to go below this level and my entry can be anywhere in this range here below the 50%, right? And as long as I get a nice 2-to-1, 3-to-1 take profit, I can use that as an entry, for like a New York session or London session trade, right? Can you look to an M1, M5 entry? Yeah, we can take a look at the lower time frames just for study's sake. Okay, now on the 5-minute, now we have much cleaner, kind of points of interest. You can see there's a nice little imbalance right here. There's an order block right here. So I can actually use this, right, as an entry point. Okay, and now you can keep the same stop. I would recommend keeping the same stop, right? Because this is the low that I'm expecting price to hold. If we use the 5-minute low here, you can see that it does hold, although it comes very close to it. Okay, and you do get a better risk reward because your stop now cuts in half. Okay, so now your risk reward becomes, instead of 3-to-1, 4-to-1, it becomes 7-to-1, 8-to-1. Okay, in this case. So yes, there's lower time frame entries that are more precise. You can get better stop losses on this, but there's also cases where why I'm saying to keep it at this low is because sometimes these internal lows on the lower time frames also act as liquidity, right, for price to sweep to then continue later on, right? So it might not sweep it here, but maybe it comes back like maybe late in New York session or in London close, where it comes back and it takes that liquidity and then continues up, right, and goes to where you're expecting to go. But this is actually where we expect price not to break, because this is where we took the last stop hunt low from the London session, right? So this is actually a much cleaner point of interest, or actually where you should put your stop, because if it does break this, then we are in fact bearish, right? And it should continue bearish after that, right? So 5-minute entry here is really nice. And let's just to make it even better if we can. Yeah, so 1 minute, you can see even a smaller entry point right there, right? And even smaller stop in this case. So if my entry's there, right where, let's just say right where the imbalance starts, my stop in this case here is going to be, what is that? 2.7, like 3 pip stop, right? And so now my risk reward becomes, more than a 10R, which is great, right? And if you're expecting it to reach, the highs, which, it should on the, in terms of what we're looking for on the higher time frames, then it's going to be much, much more than that, right? Get up to here, let's say, right? Now we're looking at 20R. Now these are kind of, really extreme cases. You shouldn't expect to get, these all the time, right? But they're there. But like I said, if you just want to simplify it and look for it on, a 15-minute time frame, or where you're comfortable, wherever you're comfortable taking entries, you can still, as long as you can carve out a nice, 3R trade, that's still a great trade. I would not, scoff at 3R. Okay, so that's a good example there on EU. Let's head on over to GU and we'll take a look at same idea. Okay, so GU on the monthly, we can see that we have a same thing. Okay, so we've got a bearish downtrend. Okay, it's been bearish. It's been moving lower. It's been doing that for a long time. And so right now we're inside of this kind of like mini consolidation here on the monthly. Okay, the last range we have on the monthly is this high to this low. All right, we've got a lower high, right? And we're going to be expecting price to make a lower low. If it continues in this range, when we should expect it to make a lower low and break this low, okay? So we've got, do we have a confirmation of that being the lower high? Well, we got a 3-bar swing. 1, 2, 3, right? And we have the confirmation, meaning we have the third candle's low breached. Okay. If we're gonna now we do have a 3-bar back the other way, although it's not confirmed. Okay, so we have a lower low here, like the lowest candle. We have a higher low to the left, higher low to the right. So there's a 3-bar, right? The confirmation comes when we have the third candle breached. The high is breached on the third candle, which gives us the confirmation that it's likely going higher. Okay, and so this is the close of November. Like I said, the monthly candle is going to close bullish. Okay, so likely we're going to see price continue bullish for December as well. Okay, but not necessarily meaning that we're going to see it, continue up and be bullish like up here. But in the smaller range here, whereas we have this high and this low, okay, we could see it go up. Let's just say it closes here. December starts off with like a retracement. It comes up, it makes a lower high here, and then we continue down, right? Something like this for it to be bearish, right? That would be the expectation for the start of the week. But regardless, because these are monthly candles, this something like this would take like I said, it would take years to come to fruition, right? 2026, 2027. So I'm not looking for this per se. I'm just looking for what might happen at the start of the month and what might price do, in order to do this, right? In order to do this, what will price do right now to complete this story, right? So if December starts off, bearish first and then it comes up and closes bullish, where would it close and where would it go? Likely it would go to the premium of this range, right? Or somewhere in the premium of this range. Even if we were going to be bullish and trade through the high, it would still have to trade up to here, right? At some point. So I'm still expecting price to at least move up into this region, right? Does that make sense? So if it does do that and then goes on higher, sure, fine, great. That's great, right? If it goes here and it reverses, right, like it's expected to do, that's great also. Either way, right, price should make a move up to this region, or at least that's the expectation. Okay, so it's all about the expectation and the probabilities of what you're expecting it to do and how you map the trades, to fulfill your analysis. Okay, so if I let's drop down to a weekly chart. Okay, and we'll see what the weekly is doing. Now on the weekly, you can see that we have not only do we have just like we had in the euro dollar, we had a breach here, right? So the bullish uptrend failed to make the next higher low here, right? So we broke the higher low over here, we broke the higher low over here, and then we have this big bearish move to the downside. So on the weekly, we can say that we are no longer, or the expectation would be that we would no longer make another high above this level here, and we would only look for price to trade up to this region to make a lower high and then trade lower, right? So something like this, where we've got this low, it comes up to here, somewhere in here, we don't know where, make a lower high and then continue down and be bearish, right? Why am I expecting that to happen? Because this bullish move, right, that was previously making higher highs and higher lows has now been broken to the downside, right? This higher low here was breached. So if this, was bullish, or the expectation was for it to be bullish, then I would have probably likely seen price make a higher low somewhere over here and respected this low, right? And then continued higher. But because it didn't do that and we broke the low, we got a weekly change of character, right? Which means that price potentially could be reversing or going lower. And so I would be expecting price to make some sort of lower high over here, right? But I don't know where that's going to happen. So while, like I said, it could go above this high and it could be bullish from here, this could be a stop hunt and we could see price go, above and keep going higher. Either way, whether it's going to go higher or whether it's going to make a lower high here and reverse, I'm still expecting price to cover this area right here and reach this point. Does that make sense? So either way, I'm looking for price, or I'm looking for a bullish move in this short term, right? In the next, few weeks, on this weekly chart, I'm looking for it to make a move up into this region. Okay, so the bias is bullish, right? We close the month of November bullish, right? And we closed last week bullish. Okay, so the continuation or the expectation is going to be for the next week to continue bullish. So having said that, let's drop down to daily. All right, and now on the daily chart, we can see the same thing, right? So we had a swing low down here. And so what I like to do is, like I said, look at my last break of structure, look at my most recent range, okay, and then kind of figure out where price should go from that point. So this is my last break, okay, this is my last low, and my swing high has yet to be formed. We don't have a swing high yet, right? Because we don't have a 3-bar swing yet. So we know that price is just continually moving higher. Okay, the last 3-bar that we had was a bullish one, which is this right here. 1, 2, 3, and you can see the third candle's high is broken, so we expect price to continue bullish. Okay, we'd expect it to continue higher. I have this point of interest here marked out because it's just an arbitrary point of interest on the range. The next one above is going to be above here. Okay, and so if I'm bullish, where am I expecting it to go? In here, right? But also potentially above this high. So my target can be 127.50, right? And I can set that as my weekly target. Liquidity target, right? And so I'm looking for price to potentially reach here for next week, okay, or into this region. All right. If I'm not making sense or if you need me to clarify anything, let me know. All right. Okay. Let's go down to the 4-hour. Okay, same thing here. Okay, so we got a 4-hour break of structure. Last 4-hour break of structure was here. We broke above this high. We made this, sorry, I guess this one counts as well. Make that one right there. Okay, and then our last swing low, right? That went on to make this swing high. Okay, so if I have a bullish structure, right? We had a bullish break of the high, then we're expecting price to continue. Obviously, in the order flow in the range is all bullish. So after a break of structure, we expect price to give us some sort of pullback or some sort of swing high, which we don't see just yet. Okay, we have potentially a swing high here, but it's not really that that clear. All right, the candles are still very bullish, so we're going to be expecting price to continue higher. The target for the 4-hour is above this high. So I can look for 126.50 to target the next imbalance and the above the high. And that can be my my objective for the near term. Okay. This level here is because there's an imbalance in OB here, right? I've got that marked out, but like I said, there's not a clear reaction here that's going to tell me if this is going to be a valid point of interest. So let's drop down to the 15. All right, so now on the 15-minute, our last break of structure was here. And we're still looking for a swing high, right? This potentially could be a swing high here. It's kind of consolidating and making its way down, so that potentially could be it. I generally look for price to give me a change of character, right? So you can see here, price is moving higher, higher highs and higher lows as we move up the range. This is my last higher low that makes the high, right? So I really need to see price come down and break through this level here if that's going to be a reversal and a swing high, right? Something like this. So I don't see that yet. So it's possible that price, there's a consolidation here. I don't know if it's going to come down below here. We could see price maybe hold the OB here and continue higher from there, right? That's also a possibility. But there's nothing here that tells me that it's bearish just yet. So I will continue to assume price is going to go higher, meaning that I will look for price to actually give me some sort of reaction here, right? So this is our 15-minute OB. which also potentially could be the OB that gives us the reversal, right? So if it breaks below here, right, then I'll potentially be looking for it to continue down the range. Otherwise, I would just, be assuming that price is going to come down here, make the next higher low, and then continue up, right? So that's kind of how I'm looking at GU going into next week. So this is going to be an area that I watch, right? And as price comes down into this area, how I react to this area is going to be important, right? So if it breaks the level, then it's potentially my swing high and my reversal. If it holds, then this is the next higher low that's just going to keep going higher, right? And that's probably more likely given that we have such a bullish bias on all the other time frames, right? So that is GU. Next, let's go over to gold. All right. Now, for gold, we've got on the monthly view, it's in a consolidation. Okay. And the last high that we took over here was back in 2020. Okay. And that's where we made this high up at 2075, I believe, right? Or thereabouts. We actually went above that just recently here, okay, and we're still consolidating, right? So if we actually see price continue higher, I mean, obviously we're looking for price to make all-time highs or new highs with gold, and I'm expecting it to make a run into like the 2100 areas. Okay, so you can see here from the chart that we have a 3-bar swing to the upside, 1, 2, 3, but we don't have a confirmation yet because we don't have a run above the third candle's high just yet, right? So we actually need to see price close, right? So this is a monthly candle for gold. So it'll be the third candle, and whatever high paints here, we want the next candle or the December month to break above that. All right. Let's actually we'll put the markups here so you can see this. Okay. We had the retracement here, right? 3-bar swing to the downside. We expect price to come down into the discount or into a point of interest here that will continue. In this case here, we've got the swing low with the 3-bar swing, and we need the confirmation to actually, say that this is where it's going to continue up, right? Okay, no problem, Pete. We'll catch the rest of it on the recording. Okay, so let's drop down to the weekly. All right. Now on the weekly, we've got our most recent break. Is all the way back over here. We don't have a break of the high with a candle close, okay? So a lot of these are just kind of like reaching above the wicks, right? And then taking the highs above the wicks and then coming back down the range. So not technically like a break of structure because I only count a candle close above the wicks as a break of structure. These to me would be like, if it's a wick, it would be more like a stop hunt or liquidity grab. So this right here is a 3-bar swing, right? We can see the low, higher low to the left, higher low to the right. This candle clearly breaks above, and now we've got a continuation, okay? Now, if you guys can see, like this low here is right around 1800, right? And this level. Now, there's a seasonal tendency that happens with gold that, it's not always the case, but every year around the time of like around fall, okay, like September, October, November, gold usually paints a low, right? And that's usually the low that stays that way. It goes into the first quarter, as like the low that continues into the first quarter, meaning like here you can see the October low. This is in October. That was for this year. Last year, again in October 2022, this low here. 2021, October. All right, in this case, in October, or sorry, in 2021, there was a low over here that was lower, but the one in September or October, you can see that this continues up, right, into March of the next year. Okay, so the pattern that happens with gold is that there's a low that forms in October or September or the fall. Okay, and then that low rallies into the first quarter of the year. So it's happened pretty much like if you go back in time, and you can just kind of go back and back test this for yourself, but it happens a lot. Okay, so last year I was able to predict the low and say that where it was going to turn around and go because of this kind of seasonal tendency, and the year before that, and year before that, right? So the only year that actually kind of messed this up was COVID year, right over here. So that kind of turned things upside down a little bit and just kind of made things wacky. But then after that, it started to come back in line again. Okay. So this year is no different. I still, I believe that this is going to be the low of this year. Obviously, we're at the very end of the year, so it's very unlikely to see price come back down here at this point. But I expect this to be the low, and that we're going to see a rally from, now until the first quarter of the year, meaning like probably, February or March. Okay. And the target, as you can guess, is going to be this high. Okay. So I'm expecting price to reach all-time highs, into the next year. So 2024, I'm expecting price to reach up into, 2100s and beyond. Okay. So this basically, long story short, is that we're looking at a bullish bias, right? Just like we are on the monthly and the weekly. Okay. And so if we see here on the weekly, we have a 3-bar swing. We've got a continuation. We've got another 3-bar swing. If we look at this right here, you can see 1, 2, 3. There's the low, higher low to the left, higher low to the right. So I'm going to be expecting price to continue through, right, and breaking this and going higher from here, right? So it's a bullish bias here on the weekly. If we drop down to the daily, more of the same. Okay. We've got a high over here, right? That's going to be the target for next week, the obvious target for next week, which is just above 2009, looks like, right? And above that, the next obvious high is just the high, right? The all-time high. So that's the high I'm expecting price to run through, okay? And we'll see if that happens into like before December or into next year. Okay, so this is my target. And I've got a 3-bar swing low here on the daily. 1, 2, 3, right? And it's continued. I haven't had a 3-bar swing the other way to negate this, so it's still bullish. Okay, and everything is still to the upside. So it's kind of a close target. I mean, we should have reached that last week, but we didn't. So looking for that to break, relatively soon, 2009, 2010, and beyond, and then going up. All right, let's go to the 4-hour. Okay, and this is my daily target. All right. So as you can see, the last break of structure on the 4-hour, okay, was this low, right? But the retracement that's happening right now, okay, is we're still bullish, right? So you can see we're making higher highs, higher lows, right? Higher highs, higher lows. And the last higher low was here. And so the target that we're looking for is, like I said, it's really close. That's what I'm looking for next. Okay, so there's our higher low, and we'll be looking for it to reach through. All right. No problem, Nicholas. Jeff, what's the 3-bar swing? How does it work? What do you look for? Okay, so I kind of mentioned that in the beginning, but so a 3-bar swing looks like this. Okay, and this could be for bullish or bearish, right? But there's one candle, there's another candle, right? This is going to be a swing low, and this is a third candle. Okay, now the doesn't matter what color the candles are, but this is what you're looking for. So you want to see a low, all right, for a swing low. You want to see a higher low to the left and a higher low to the right. Okay, so just like this right here. Okay, we've got a low, we've got a higher low to the left, a higher low to the right. Now, in order to confirm the 3-bar swing, it's not just enough that you have the 3-bar, but you want to see the following candle breach the high of this third candle's high. Okay, that's for when we're bullish. If we're bearish, just flip this around and you want to see the third candle's low broken. Okay, so like, for example, if we're bearish, now I'm looking for price to do this, and I'm looking for the third candle's low to be broken to confirm. Okay, so this gives me a directional bias. Okay, this tells me that price is going to continue in the direction that I'm assuming that this is going to be a bearish swing high. So this tells me that price is going to continue bearish. The other way around, this is a bullish swing low. So now if I break this high, it's going to tell me that price is going to continue bullish, right? It's used for directional bias, and it's going to tell you that price is, either continuing whichever direction. Now, the caveat behind this is that you want to use this on the higher time frames only. Okay, I wouldn't use this beyond a 4-hour chart. I usually only use this for a daily chart for the swings, right? Sometimes I'll use them for the 4-hour, but it's mostly for, like I said, a daily directional bias for me, right? So if I have a swing high or a swing low on the daily, I know that the direction for the day or for the next few days, foreseeable few days, is going to be either bullish or bearish. So I know which direction to trade. Right now, this has to be in line with the other time frames, of course, but it starts with the higher time frames, right? So if I have a daily bias, then I work down my 4-hour. If my 4-hour is also in line with my daily, then now I have a pretty strong direction that I can trade on the 15-minute, right? Does that make sense? So you want to have this kind of directional bias in your head in the higher time frames, and then on the 15-minute you want to trade in that direction. Okay, so we've just established that we have on the 4-hour and the daily that we have, and even on the monthly and the weekly, that we have a bullish bias, right? So this tells me that I should be looking for bullish setups, and that I should be looking for where should likely price go if I'm bullish. What's the draw on liquidity? Where am I looking for price to go? Well, price is likely going to go above the highs, or it's going to seek liquidity above the highs. So you want to trade and target for these highs up here, right? And so the most obvious one in this time frame is this high. Okay, but like I said, in the higher time frames, we'll be looking for price to make all-time highs and trade above these levels up here. Okay, or at least make a run for those levels, even if it doesn't get above those levels, but maybe somewhere in this area. Okay, and that gives you a nice directional bias for the week, and it tells you which direction that you should be looking to trade, right? Which is going to give you more successful setups. That doesn't mean you can't trade the opposite or the counter trend, right? Because you can, but obviously the conditions have to be right for that, and you actually know, where to look for those. Okay, so it's easier to trade with the trend. It's easier to trade when, with the directional bias. It's just less stressful trading that way, right? I'm sure most of you guys can understand. All right, so does that make sense with the 3-bar? You guys understand how that works now? If not, let me know. All right, so if I've got this 4-hour target up here, all right, and I'm looking for bullish moves, if I go down to the 15-minute, now I can start planning my my setups, or what I'm looking for, right? And so on Friday we left off, obviously we were up here, right? We're looking for price to continue to go above this high here. So what can I do as, or how can I approach this, right? This chart in this range in terms of a setup? What am I looking for price to do? Well, I can start with the 15-minute ranges, right? And so that would be obviously where I would advise you guys to start is again, look for your most recent range, look for your most recent breakup structure, and then work backwards from there, right? So here's my high. Oops. Here's my high, right? The most recent break was over here. We made this high and we pulled back. Here's the low, okay? So what am I expecting price to do? I'm expecting price to run this high from this low, right? So it's already kind of in the upper portion of the range, which is not ideal if you're looking for bullish setups. But we can see here that like, all right, I'm expecting this low to hold, right? So in the the bigger structure, I'm looking for the high to be run and this low to hold. So this higher low, right, or this higher low here should hold, and then each subsequent higher low as we make it in the smaller time frames should also hold. You can see that this is the last kind of big um, higher low that we made here. We also had a little sweep of liquidity below the lows here. Okay, so I would be expecting price to hold this level. If we do get a retracement or the start of the week opens and we get a retracement into this level here, right? I'm going to be looking for something like this, right? And then through the high. Just a simple idea. Okay. How it does that doesn't matter to me, right? But it could consolidate for forever, right? Consolidate for Asia. It could consolidate through London, and then New York does this, right? But this is, this is kind of what I'm expecting price to do. So I want to see something similar to this happen at the start of the week to basically corroborate my bias. So this would be like a stop hunt low rise, right? And so this is the situation where like look at the structure, right? So I've got higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? And so if this happens here, I get this breach like this. Okay, so now I have a lower low, right, which shouldn't happen in an uptrend. But if this lower low doesn't confirm, meaning it doesn't give me a lower high here and continue lower, but instead breaks the high and continues up, there's my condition, right? I've got the sweep, I've got the change of character, right? And now instead of, it's expecting it to go lower, now I've got this range, right? So now it's done this, right? I'm going to expecting it to pull back. And when we pull back, my range becomes this high and this low. 1, 2, right? And I'm going to be looking for some kind of setup or entry to happen right here in this region, right? And then from there to go up. Okay, just like we saw in this Euro USD example. Right? Does that make sense? So that's what I'm looking for the condition to happen is when we're bullish, we have a bullish bias, right? We look for a stop hunt low and then a rise, and that stop hunt takes out some sort of internal low, but still respects the overall bullish structure. And then we get the change of character and then the retracement, and then we look for the entry, right? So that'll be what I look for here. And then this will be my target for the first target. Okay, obviously after that, then we look for the next high above that. Okay, hopefully that makes sense. So that's gold. All right, let's go over to NASDAQ. Now, if we look at NASDAQ on a monthly, okay, we can see that we had a 3-bar swing to the downside, right? 1, 2, 3, which confirmed with the third candle here being broken to the downside, right? And then even a continuation after that. However, now you can see that the month of November, we closed above all of these highs, right? And we actually broke above that high that we made, back in July. And so we have the start of now a bullish 3-bar swing. 1, 2, 3. Okay. And the fact that we closed this aggressively, so this is kind of like a bullish engulfing candle that took out all of these highs here, right? Took this structure. So very likely we're going to see the next month, meaning December, also be bullish, right? And where's the target that I'm looking for? Well, the next high is right here, right? So that's going to be my monthly target, reaching up here to 16.7, 16. This is the OANDA chart, so your data might be different if you have a different broker. But the concept is the same, looking for price to run this high. Okay, and so we're looking for the next candle to be bullish. Now, because it's a monthly chart and these are monthly candles, price could start the month off bearish, right? We would expect price to retrace, or since we made this move up here, price will probably retrace first and then continue up higher, right? And then so we start the month off bearish, right? And then we close bullish, right? And so that would be the month of December, or that December candle, or that's what I'm expecting price to do. So that would be the expectation on the monthly. Let's go down to the weekly and let's just confirm that. Okay, now look at the weekly, right? The weekly has a 3-bar swing, but now we have a confirmed 3-bar swing here. So let's look at here. We've got a low, higher low to the left, higher low to the right. And so the third candle here is broken to the upside, and we can see the price continued in that direction when we got that breach, right? It's not 100%, but it's an indication that price is going to continue in that direction when we get that confirmation. Okay, so it's just for bias and directional bias for the for that time frame. Okay, you can see that we also breached the high here, and we also closed above this high, so I can actually change this into a BMS. Okay, so it's breached the high, it's closed above with a candle close, not just a wick. So that is a confirmed break of structure, which means that this down here is also a confirmed swing low. Okay, and so now, obviously, after a break of structure, we'd expect price to give us some sort of swing high and then a retracement, right? And then a continuation, if so be it. But in this case here, right, we don't see a swing high just yet. So we're going to assume that price is going to continue to the upside, or want to continue upwards. All right. So where will we expect price to go next? Well, obviously going to be above this next weekly high candle. Okay. So the target is going to be 16, just above 16,000 big figure, right? And then reaching up into these weekly points of interest up here, and eventually above this level here, which I've marked as well. Okay, that's going to be the ultimate target this week here. All right, that's going to be up at 16.8 or thereabouts. All right, I marked this here out because it's just, potentially could be a reaction here after we take out this high. But overall, the direction we're looking for is that we're going to be bullish, right? Let's drop down to the daily, confirm that as well. Okay, and on the daily, again, my range and my structure, right? Where's my most recent break of structure? This high over here. Okay, we can see that we've broken above that pretty aggressively, so that can be that's confirmed, right? Wasn't a wick, it was a clear body break, and it was actually a very strong candle as well. Okay, so we've broken above that high, and now we're seeing some consolidation, right? We have a 3-bar swing high, but we don't. Oh, actually, we do have a confirmation here. So we've got a swing high, we've got a lower high to the left, and a lower high to the right, and we actually have a breach of that third candle's low. Okay, so now we could be expecting price to continue lower, and this being the swing high, right? Again, not a 100%, but like I said, if we have this confirmation, okay, and we did close with a bearish candle at the end of the week and on Friday, so we could be expecting price to come down a little bit further down in this range. Even if we're bullish, we would expect price to retrace, okay, after taking out a significant high, or some kind of high. We'd expect price to retrace and maybe retrace back into like a higher low, and then continue up after that, right? These are just assumptions, but we're just taking it day by day and playing it by ear. So on the 4-hour, okay, I'm going to do the same thing on the 4-hour here. 4-hour chart, my last break of structure over here, my swing high. We've actually made a couple swing highs here, so this is the most recent one. Okay, we can see that the 4-hour order flow is bullish, right? Making higher highs, and higher lows, right? And still doing so. In this case here, this last high was a wick, okay? So not technically a candle close, but still a higher high. And this last higher low over here, I'll move this candle back over to this candle over here. All right. Now the idea is that if we're bullish, we're going to assume that price is going to continue to move higher, meaning it's going to continue to make higher highs and higher lows, like this. Okay, so as we retrace into this area here, if we're bullish, we should stay above this high, or above this low rather, and continue to do this, right? Whatever. I'm not sure how that structure is going to look, but that's what I'm expecting it to do if we're bullish, right? Now, if this is a swing high and it's going to be a reversal, what should it do? It should give me a break of that low, meaning we should break below this higher low. Okay. And if we do that, that'll potentially give us a reversal, right? Meaning that it'll make a lower high over here, and then we should continue down the range and pull back. Okay. Those are just two scenarios that can happen that you can, expect price to do if one of those things happens, right? If we continue bullish, we're going to hold this low. It's going to keep going up. If we don't, we'll break this low. It'll give us a change of character, and then we'll continue lower, right? So those are your two premises for this range. Let's go to the 15-minute. Okay, and now we can kind of see how that fits into the 15-minute. All right, now 15-minute structure. Where's my most recent break? This is my 15-minute high that was broken. Okay, that makes this my low, and that makes this my range. Okay, so again, if we're bullish, we will hold this low. Okay, so somewhere down here in this 15-minute discount area, there's going to be a point of interest that price reacts to that makes a higher low that price will continue to go higher from. Okay, and now we don't know which point of interest that's going to be. We have a couple down here that we could trade or that we could see price come down into to react that will give us that reaction. I can see that there's an imbalance here and an OB here. Okay, so that would be like one of them right here. Okay, now there's one here as well, right? There's the one that we reacted to was this one right here. Okay, now this reaction could very well be the higher low, right? I don't know if that's going to be the case. How do I confirm if that's going to be the higher low? Well, if it is, then the reaction that it makes generally will give me what? A change of character, right? So this high is going to be breached because I can see right now that the order flow and the structure is bearish, meaning that we're making lower lows and lower highs. So I can just kind of illustrate that here, right? And so if we're going to go lower and continue lower, then this should hold. We should make a lower high here, and we should continue down like this, right? If we're bearish. Now, if we're bullish and we get, price coming into one of these points of interest here, okay, then the reaction should be something like this, where we get a lower low, right? Lower high. And then if we hit this point of interest, it's going to breach and break that high and give us a change of character and then continue up from there. All right, that's really all you're looking for in terms of points of interest, because you don't know where exactly the area it is that's going to react to give you the higher low, but there's a very good chance that when it does react, it's going to give you that condition, right? Where it hits a certain area. It's good if it takes out liquidity as well. So like in this case here, let's say it does reach this as our point of interest. Well, when we come down here and we hit this level and react, right? Not only do we get a change of character, but we also sweep the lows, right, of the lows here. So we have a liquidity sweep or manipulation or stop hunt below this level. Then we also get a shift, right? Change of character. Even better if we get like a big imbalance or a big push, right? That's a very strong move that happens after that. That makes it even better, right? That makes it a much stronger confirmation. And then when that high is formed and it starts to retrace, then you take that range, you pull the fib, right, from the high and the low, and you look for your discount entry somewhere in here. right? And then again, you look for the move back up. All right. So at the start of the week, this is what I'll look for. We can ask, we can look for the points of interest in this 15-minute discount range, right? Because as of right now, we can see that we're bullish. We've broken the high, right? And we're expecting price to continue to be bullish. So we're looking for the next higher low, right? If it's going to continue to be bearish, then this low is going to break, right? And we're going to breach that low, and then we should look for a reversal at that point and for price to continue lower. Okay. All right. Um, that is pretty much the rundown for today. I don't want to drag this on too much, but everyone hopefully understands what I've kind of covered here with these ranges. If you guys are free members and have been kind of been absorbing the stuff that I've been putting out as of late, you guys should have a decent understanding of this, right? If you have any questions on anything that I've covered, please let me know. But we cover this obviously more in depth in our VIP membership. So we have a special going on right now. Obviously, you guys have seen that also in the group that I posted. Okay, our Black Friday sale between now and Monday. So that's actually Black Friday / Cyber Monday, right? Make sure that you guys do take advantage of that if you can. And any purchase that you make on the site, just use the code FXMS70, right? And that goes for any of the VIP plans, any of the courses that we offer, any of the services that we have right now, all have that discount, and that's going to go on until the end of Monday. So basically the 27th, 11:30 p.m. or anytime before midnight, basically. Right? Okay. So any questions on anything from today or anything on the chart that I did not cover? Feel free to ask. This is also recorded, like I said, so you will have a copy of this and you can review. And if you have any questions, you can always leave a comment below. I'll also post this on the YouTube channel, so you guys can comment and ask questions afterwards. If you think of something afterwards, sometimes it might not be a question that you have at the moment, but if you review it and go over it again, you might think, oh, I should ask that. Well, you can comment on the video afterwards if that's the case. Okay. Um, all right, you're very welcome, guys. When is my next discount? I'm not sure when the next discount is. I mean, this is a pretty big one. This is the biggest one I've done in a while. So if you can't take advantage of this, it's a shame, but it's probably not going to be as low next time, as 70% off. But all right, yeah, but yeah, this will be uploaded, and you guys will have a chance to comment if you need to. But yeah, welcome guys. Let me stop the recording here.